2026 is going to be very hot, but not for everybody. It's going to be hot for those who have refused to pay attention to tax education, those who have refused to learn what the 2026 tax law is saying and to get a full understanding of it. Those are the people it's going to be hot for. But for you who is listening to me right now, watching this video, it's not going to be hot for you, because I am about to explain to you how personal income tax is calculated. Now, before I go into that, know that by 2026, January 1, 2026, almost every person is going to pay tax. Yes, the tax net has been widened. A lot of people have now been captured into the tax nets. So whether you are a freelancer, you are a business owner, you are a content creator, or whatever thing you are doing, you are now eligible to pay personal income tax. Even when you don't pay tax, you are expected to file your tax and to do your self-assessment and a whole lot of other things that are compulsory, whether you pay tax or not. And it's very important you know about all these things so that you'll be able to avoid unnecessary penalties and save a whole lot of money. All right, in this video I'm going to walk you through how to compute personal income tax as an employee. We are going to see the things that makes up your income, the things that you can deduct, the things you are exempted from, and the tax band that you fall into. It's going to be very educative and interactive. Now, before we jump into our Microsoft Excel sheet where I'm going to show you this, remember, if you need this Microsoft Excel template to calculate your personal income tax, I have dropped the link in the description where you can easily click and be able to get this template for your own personal use. All right, so quickly, let's jump into our Microsoft Excel so that I'll explain. While we go into it, I also assume that you know the theories about personal income tax. What I'm going to show you in this video is purely the calculation and computation of personal income tax. Let's go. So now we are in our Microsoft Excel, and as you can see, I have built out a very beautiful and wonderful personal income tax computation template. Now, this template is very robust and very unique, and you can see the breakdown that I have here. Okay, so before we go into calculation or computation of any tax, I want to first of all run you through how this template works, and we'll be using this template to do physical calculation or real life calculation with you in this video, so that you get to see how we come about all the figures that you have here. First, just as I said initially, it is not straightforward to determine the tax of any person or any individual. So anywhere you see any video on the internet, on YouTube or any social media platform telling you that if you earn 100,000, your tax is so and so. If you earn 500,000, your tax is so and so. If you earn 1 million, your tax is so and so. Just know that whomever that is making that video is giving you fake information, because computing the tax, especially under this new tax law, is not as straightforward as that. There are many things, there are things that you need to consider. There are factors that plays or that comes to play for you to be able to detect or determine or ascertain an individual tax that they will be paying. Okay, so anywhere you see such information, just know that it is a fake information. And that's why I'm teaching you here, so that you will be able to compute your own tax and not fall into such false information. Now, having said that, the first thing that makes up your tax is your personal income, or where you can say, here I tagged it the personal income tax calculator, which is the name of this template. So, this is your personal income where it comes in. So your monthly salary is the first thing which we capture here. So you can also see other templates start with annual salary. That is also fine. Okay. But here we choose to start with monthly salary. So this person earns a monthly salary of 500,000. And when you multiply that 500,000 by 12, you get this 6 million. So the annual salary of this person is 6 million. So in this case, we also assume that this person pays a rent of what? 20 million. Okay. The first thing in computing your tax is that you must know what you earn. That is why from January 2026, keeping record of what you earn is very important. In fact, if you want to become tax compliant by next year, 2026, it starts with keeping proper record. And that is why if you are also an accountant and you know how to keep record very well, many organizations will be needing your service. And of course, you know that at Touch Accounting Services, which is our bookkeeping business, and also here on this YouTube channel, the bookkeeping expert, we teach you how to keep proper record and also how to monetize it. So you can check out some of the videos which I have made here so far and learn how to keep proper record. And if you want to get expert guidance directly, you can use the link in the description to register for our Zoho Books fundamental training, where you will learn how to keep proper record using Zoho Books accounting software. So that's by the way. Once you know your earnings and know your rent, the next thing you need to know when it comes to computing your tax is the deductibles. Now, what does deductible means? Now, because I know that there are a lot of people that are also non-accountants, that are not auditors, that are not financially inclined or into accounting and the rest of it, I'm not going to be using the big tax words and grammars and jargons. Now, this deductible simply means the portion of your income that you will not pay tax on. So anytime you hear deductibles, it means the portion of your income that you will not pay tax on. And because you will not pay tax on them, you have the right to take them out of your income. That is why we say deductible. That means you deduct it from your income before you now calculate your tax. Okay. So the number one thing that you can deduct is your pension. Now, the general percentage or general percentage of tax is 18%. Okay. Now, out of that 18%, the company you are working for or the organization you're working for pays 10%, while you, the person who is working for the organization, pays 8%. And that is why we are using 8% here instead of 18%. Okay. Now, this 8% there is an explanation for it. This 8% is 8% of your salary. And when we say 8% of your salary, it means basic housing and transport. Okay. I don't want to go into breaking down the basics, the housing and transport, but just know that in normal salary computation, your salary is divided into many portions, and some of those portions is the basic housing and transport. So it means that if your salary, just like this person's salary is 6 million, this salary can be broken down into basic. Out of this 6 million, so and so amount is the basic. Out of this 6 million, 20,000 is the housing. Out of this 6 million, 50,000 is the transport. So there are other things like meals, transport, and the rest of it. So, but this 8% is of what? Basic housing and transport. Okay. So, and that is for that one. Then there is what? National Health Insurance Scheme. National Health Insurance Scheme is 5%. Okay. Is 5%, and is 5% of your gross salary. Okay. Now, other organized private sector can offer you things like HMO and the rest of it. But we are using 5%, which is the accurate percentage for National Health Insurance Scheme. And that is 5% of the gross salary. Now, the next thing we also have here is National Health Fund. And National Health Fund is 2.5. And that is 2.5 of your gross salary. And it is actually optional, which means you can choose to pay or not pay National Health Insurance Fund. Now, National Health Fund, okay, National Health Fund rather, okay. So the next one you can deduct is your rent relief. The rent relief is 20%, okay, and this 20% is capped at 500. Now, what this simply means is that if you calculate your rent relief and it is more than 500,000, okay, we'll take only 500,000. This is just a layman explanation of what this 20% of rent with a cap of 500,000. So if you calculate 20% and it's like 600,000, what you will use to compute your tax is going to be what? Only 500. Okay, it will be only 500. What you can deduct is 500, not the 600, because the 600 is already above the cap. I believe it is making sense to you. I'm taking time now to run you through this before we now go into the real computation and calculation of your tax. So after that, we have your total deductibles. And when we now minus your total deductible from your annual salary, we'll have this figure. And then once we have this figure, now this is what your taxable income. Now, what does the taxable income means for a layman? Okay, what it simply means is that portion of your income that the government can now take tax from. All right. I've heard people saying on social media that government will be taking tax directly from the money in your bank account. That is not true. There is no time the government will go to your bank account and deduct money. The government have given you the power now to sit down, calculate your tax, do your self-assessment, arrive at your tax, pay your tax, file whatever thing you need to file. So the power is in your hand. And when you don't do it, the government can now go ahead and penalize you and say, okay, we gave you the power to calculate your tax and tell us what your tax is. And because you did not do it, this is the fine for not doing it within the required period of time, okay, for paying such tax. All right. So since we have arrived at your taxable income, we can now go ahead and apply the tax band on it. Now, I know somebody might be asking, what is the tax band? You kept on hearing on social media that the tax nets have been widened. You kept on hearing that there is a new tax band. Now, what you're seeing on your screen is what the tax band looks like. Now, let me just break down the tax band. The tax band simply means, if it is an age, we would have called it age bracket. Every individual has an age bracket. There are people that are 0 to 1 month. There are children that are 0 to 2 months. Okay, it is an age bracket. So here you are seeing first 800,000. It is a bracket, which means there are people that their income falls into 0 to what? 800,000. Okay, so there are also another bracket, people that their income falls within what? 800 to 2.2 million. And there is also another bracket, next 9 million, next 13 million, next 25 million, and above 50 million. I'm trying to break this down in a layman terms now so that you'll be able to comprehend and understand it. Now, the next thing you have is what? The tax rate. So for any person who falls under the first 800, the percentage to apply for their tax is 0%. For any person who falls within 2.2, 15%. For any person who falls within 9 million, 18%. For any person who falls within 13 million, 21%. For any person who falls within 25 million, 23% applies. For any person who falls above 50 million, 25% applies. But also remember that this tax band is a graduating rate. So that your income falls in 800,000, it can actually also spill over to 2.2 million. And that is why we say it is a graduating rate. Okay, that is why you say it's a graduating rate or a graduating tax band. Okay, so you're going to see some of those things when we start doing the practical examples. Okay, now this is the income band. So I think by explaining the tax band, I have also explained the income band. Then we have the balances and the tax to pay. We have the yearly tax payable, and then we also broke it down to monthly tax payable. Now, this is a very comprehensive template which I have designed on Excel to help you to be able to calculate what your personal income tax. Now, if you want this template, I have added a link in the description which you can click to get it. Please, if you need it, go ahead and click on that link and just get it for yourself. With everything we have done using this awesome Microsoft Excel template, do you think with the new tax law, people are going to pay more tax than they used to pay before? Or do you think they are actually paying less tax? Because one of the things that the government and the tax authorities have been saying is that the new 2026 tax law is going to reduce the tax that individuals pay. So with what we have done so far, do you think that people are going to pay less tax compared to what they used to pay before? Let's have that conversation in the comment section. And if you have not subscribed to this YouTube channel, please kindly subscribe, because I'll be bringing you a lot of tax education, and I am going to be sensitizing you based on what I know and what the tax law is saying. Please kindly subscribe and ensure that you comment, like, and share this video to your friends and your community.